Hey traders, if you got bit by the bear today, you're not alone. But you know, one of the indexes is going to rebound and beat back the bear. It's going to blow your mind when you find out which one. Let's get into the session right now. Okay, Anil, let's get going.
Okay, let's go.
Okay, folks. Hey, we've got some intriguing twist to what's going on with the markets today. The market opened up on a high note. It was going, yay, and then the cheerleaders come out and everything because the PCE, an inflation report that the Fed likes to take a look at, came in below what they were anticipated. But even with that good news, unfortunately, what looks like is happening in the market is we're getting a pop and drop. And so how exactly can you profit from this kind of market action? The other questions we got to ask ourselves is, shutdown kill the market and this potential rally? Is the market basically just operating on fear? And then Tesla, the Tesla bulls are saying buy, the Tesla bears are saying don't touch that stock with anything. So Anil, what's your take on the government shutdown, potential government shutdown? And do you have anything to say about Tesla?
Tesla is right there. I'm looking at my triple screen chart. And
wait a second. Don't give anything away about Tesla because it may be one of our picks.
Oh, okay. I won't.
Okay. But what about the government shutdown?
Government shutdown. I was talking with one of my buddies this morning, and he said one expert was looking at impact of all government shutdowns, and it says market doesn't really care.
Yeah. So in other words, you're saying if Washington shuts down, that might be good for the market. So hey guys, let's stick around as we just dissect what's going on with the indexes. Plus, then we'll dive into our featured stock picks and ETF picks, and you're not going to want to miss that. So hang in there till the end, because the best picks are coming up shortly. So as I was sharing earlier with Anil, what really helped us in the month of September was over the last couple of weeks, we jumped on 3 of the leveraged inverse ETFs, one in the financials, one in the oil fields, and one the semiconductors. And they really propelled our holdings up very nicely. Here's where we were last week, and here we are this week. As you see, we're continuing to push up. I'm a little bit behind schedule on my P&L, but the trajectory is looking like it's going to take me up over my 40%, or up at least to my 40% for the year. So I'm pleased with that. Before we dive into the S&P, I want to share some of the intriguing development that's going on with that and the trading decisions you may be looking at, especially if you're trading the leveraged ETFs. But to get a full picture, the most value, hey, make sure you stick around, because I'm going to jump into the analysis of the indexes right now. So S&P, as you can see, this is a absolutely phenomenal example of what we call a pop and drop. We had good news over, before the market opened. The market opened up right there. And as you can see, it is now selling off back down where it may, if the selling accelerates, may take us through yesterday's candlestick. That would be not good, but also it would be good. And I'll explain that here shortly. The reason it's not good is we would like to see this rally attempt continue to build steam and kind of bust up through here. I have been saying for the last 3 to 4 weeks that the period between the 15th of September and the 15th of October is one of the most hazardous, challenging times to be trading. So what we may see in the particular entity is what we call a double dip pattern, where prices run up here, hit the 8-day moving average and this past level of resist, and now we're pulling back, and this come back into the wick on that candle right there, because that is a strong bullish reversal signal, a hammer at past support. And so as long as that hammer stays in effect, it means this rally attempt is also still in effect, looking very nice. And it's very clear from the weekly charts where the buyers are coming in. And so I'll be watching that going into next week around that area there. I'll put an alert to say, you know, if I'm triggered at that level, and that is about the 423, I'd say 423 to 425 level, put an alert. If you get there, if you like to trade the S&P, that would be a great place to be looking at trading it. So let's jump over into the NASDAQ to see what the NASDAQ is doing for us. It's kind of a toss-up between the NASDAQ and the Russell on which is providing the best opportunity for a potential trade. Let's take a look at the Qs first. As you can see, the Qs came down, almost hit the 50% retracement off the Fibonacci from this past move up, and this was April of this year, and we're pulling right down into the magic fib box. Check out the weekly chart, and I'll blow this up a little bit. This is a spinning top or a spinning top or a doji at support, a high sign of market indecision that may basically mark the place where it will reverse. Also, note, price action on the Qs actually popped up above the 8-day moving average. Now we're pulling back into it. But again, look for one of these patterns where we move up, come back to retest this around this past low. Doesn't have to get all the way to it. And then around somewhere between the in the first to second week, second week of October, look for a rebound. And hopefully the government will be back fully gainfully employed by that time, and it will go into the year-end rally. However, there are some prognosticators out there that are saying that October is going to be a really crummy month also. Neil, have you heard some of those guys, saying the perma bears saying, October is going to be crummy also?
No, I have not.
Okay. Yeah, I was
October should be okay, but we'll see.
Yeah, we'll see. I mean, I'm looking mid-month. I'm really looking mid-month for something to be going on there. Now that we've seen what the NASDAQ might do, what about the Russell? And of course, I'm taking a look at the IWM on that. And the Russell is, as you can see, I think in a lot of ways, the Russell may be giving us a potential opportunity, but it's got to get down to about 175. And then I'd be looking both on, it also bounced above its 8-day moving average. However, we're not getting a close above our 8-day moving average, because a lot of times people will use the close above the 8 as a trigger to say, there's my green light, time to take action. So as you see, look for a double tip type pattern, failing initial rally attempt, pulling back. Where's it going to stop? Where's it going to stop right there? On the weekly chart, similar type situation. You can see the lows for this week did get down into these past lows over here. There's buyers sitting down here who would love to buy it and push it back up. Now, if these buyers don't show up over here to support it, watch out, because then we could drop the 170 level and have further to fall. So the bear could be growling and getting ready to definitely do some damage. So that's what I've got, Anil. Right now I'm in the wait mode. Our premium AutoPilot trading members, we did get into a half position on TQQQ when it came down and got into its hammer. But right now, that's what I've got going with the indexes. Nothing, it's kind of like that old adage, there's nothing to see here, but there's a lot to wait for. What's your thoughts?
Yeah, I'm seeing the same thing on all 4 indices. I got a sell signal that came on almost when I guess in September,
right?
Early September. That has not gone away. It's still there.
Okay.
Weeklies had the buy signal, and that has not gone away. So it's an interesting situation right now. Which way it'll finally turn, we'll see.
Well, that's pretty awesome. That's where we're at right now. But drop a note down into the comments to saying which index do you think is going to do best, IWM or the Qs? IWM or the Qs? Just drop that in as a comment. I'd appreciate that. Hey, just a real quick update on the book. If you have ordered it, the book is in final review by the editors. So don't miss the chance. It'll be out probably the last week in October. Don't miss the chance to be included in the exclusive 2-day masterclass if you pre-order. And where do you pre-order? Right there, autopilottraders.com/freedom. I'll put a link down in the description and also the first pinned comment. So, hey, guys, remember that the market conditions look a bit shaky, as we're very much aware. Corrections can provide unique trading opportunities, though, for the patient. So, but how you navigate the system, how do you navigate it successfully? Well, one, by having us, Anil and I, in your corner to help guide through all the market conditions and corrections. So make sure, if you haven't yet, subscribe over the YouTube channel, like this video. Please take the link and share it with other traders, because my goal is to help you achieve your trading dreams. So stay tuned every Friday and keep trading your way to freedom. So God bless and aloha. Anil, thanks for your stock picks. Thanks for your comments.
Thank you. This is great.